We will cover terminations in 2 videos. In this instalment, we will explain how to process a normal termination for those instances when, for example, an employee resigns. We will also touch on how to deal with ETP payments. Redundancies will be covered in the next video. The software has been designed to simplify the process of creating a termination pay. All the rules within the termination module are compliant with Australian Tax Office legislation. For a termination relating to today or the future, upon creation it is saved as a draft. You must submit that termination, then have it finalised before it will be processed. It will then be included in the pay period that it relates to, or you could process it as a special pay run. If the termination is for a past date, you first of all need to enter a termination date in the master file, then proceed to the termination menu, which will automatically submit that termination once saved, but it is still required to be finalised. Note that drafts will expire if not submitted when a pay process is run that the draft termination would ordinarily have been processed in had it been finalised. These drafts will be marked as deleted. Depending on the setup of an employee, a couple of scenarios may require your attention, such as additional wages to be paid or recovered, which could also include leave taken since the previous pay run but not yet processed. Generally, final wages to be paid are best processed in a separate timesheet or pay adjustment. The termination module can include adjustments to wages, but this is best reserved for situations where the employee owes you wages to be reduced from the termination payments. This is because if entered in a normal timesheet, a negative pay would result. With that in mind, we will concentrate on the payment of termination entitlements in the demonstration. As part of due diligence, it is advised to always have a quick examination of the employee's master file screen prior to calculating a termination. Looking at this employee, the items to make a note of is the paid up to date being 16th of March, the start date of 15th of February 2012, meaning no LSL is payable. I always check the hourly rate, in this instance 30.36 per hour, and look at the outstanding leave balances to be processed. Check the last entitlement date as well. I will now go to the termination screen. Click the plus symbol and complete the info in the window. I will ignore the 3 checkboxes on this example and click Create. You can see the outstanding leave that will be generated. It is slightly higher than the master file balance we looked at earlier, as another 5 days accrual has been correctly added. All we do now is click Calculate and Save. You can now see the tax computed for this termination. You can print the termination by holding Ctrl and pressing P. Note that back at the grid view it displays as draft. If you go back in and click Submit, it then appears in the grid as the status of termination. You then need to finalise this termination and then it is ready to be processed. While in Submitted, you can then go in and enter a termination reason, and there is also the option of processing this payment as a year-to-date update only, if you do not use Pay Metrics to transmit wages to the bank and you may have paid this offline. Remember, you can delete a termination that has not yet been processed in a pay run and the status is marked as termination, meaning you clicked the submitted button. Once it is finalised, it is believed that this termination has actually occurred. How about the scenario where the employee resigns but is paid a week in lieu? Provided the termination is still in draft or terminated mode, if you hadn't already added this payment, click the Edit Details button. In the ETP Lump Sum D section, click the Add button and select the type of payment you require. Ignore the label Lump Sum D, as the software knows that this will be taxed as an ETP. Click Calculate and Save, and you can see the result. Just on the first window when we select the employee, the payment related to a previous ETP box is so that correct tax is calculated if this was a payment additional to a previous termination that already contained an ETP. The personal leave and pro rata LSL boxes simply include available balances on those items to be included in the payout when normally they would not have been. Unpaid personal leave, like unused RDOs, would be treated as an ETP in a normal termination. Here is a presentation of the points covered.